let's get right into it, Will.
Cool, yeah.
So the first one we have is housing market predictions for 2025. So some experts predict that, there's going to be a major correction while others say prices are going to keep going up.
Yeah.
What are your thoughts, man? I feel like that's the magic question.
My whole thought, and here's a lot of things. If you really, and I you know what, we'll post it right there.
Yeah.
But if you look at homes that were purchased, even let's just say in 1920.
Correct.
Okay. I'm going to say probably homes in that time, they were on average 50,000. If you look at the trend, even with the downsides, because people are right now on the fence and saying, I'm going to wait for that right opportunity.
Yes.
When the market crashes, then I'm going to get in it. And predictions show not predictions, the data.
Yeah.
Thank you, Andy. The data shows that if you're looking for that bargain, it can take you anywhere from 5 to 8 years.
Yeah.
So who knows if you're going to get it? For me, the market predictions, everything is changing because of the tariffs and everything that's, right now, the negotiation or war of negotiations, right? It's causing a lot of conflict with what's happening with the economy. We see inflation come down, but we didn't see the rates go down. And usually that's an effect that it has.
Yeah.
But because of all these other things that are being impacted by the new administration, it's just causing everything to go in a different direction.
Yeah, and I think this, starting off the year, to your point, there was so much uncertainty of what tariffs were going to actually do to the economy. We have a few weeks, months, now seeing that data, and, we have seen some prices reduce, but then again, I feel like nobody really knows what's going to happen, and also Donald Trump's verdict is very volatile in the way he delivers things at first, so I feel sometimes what he says attacks the market in a negative way, but not until he actually, clarifies and gives more context to, his tweets, his, sayings, then we can have an actual, consensus of what's actually going to be, happening in the economy. But I honestly feel that as we progress, things can only get better. We've seen the dark days these last couple of years, and I don't think that we're out just yet, but there's still,
not at all.
But there's light at the end of the tunnel. We're further that way than we are where we were a few weeks, months ago.
Yeah.
So that's always positive. But one insight I wanted to get from you, Will, is who do you think has the advantage going into 2025? Sellers or buyers?
Got it. So I'm going to go into that one. I'm going to finish with my prediction. My prediction is going to be that the market's going to continue to be pretty slow right now.
Yeah.
It's going to start off 2025 did not start off to be one of those banging years that we thought. As a matter of fact, March shows that we had the least amount of home sales. That's equivalent to 2020.
Okay.
And that was when the pandemic happened.
Yeah.
So people weren't buying, people were stuck at home. And so that's how slow the market has started in this year. And it's because of the interest rates.
Yeah. So I believe Zillow's predicting home prices to only rise by 0.9%, but then CoreLogic is up like 4%. So I'm like, I trust CoreLogic.
They're going to go in there and have more data than that.
Exactly.
I agree.
Yeah.
I agree. As a matter of fact, we've already gone up, if compared to last year, we're about 2% higher right now than we were. The medium home price is 2% higher than it was last year.
Yeah, and I mean, honestly, if you're in that position right now, I mean, we can only predict that things aren't going to get any cheaper anytime soon. Yeah. So definitely game plan and take the time to really really weigh out all your options before making a decision. But
so your question,
so moving forward, so. Who has the advantage in 2025 to start off, buyers or sellers?
Yeah, we've been seeing an uptick on inventory. Anytime we have more inventory, right, because the sellers are putting themselves in a position that I'm going to need to sell. For me right now, buyers have the upper hand, right? And it goes back to that whole cliche, don't marry the interest rate. Marry the home, right? Yeah. And that's just because you're going to end up refinancing at one point or the other.
Yes.
So I think right now it's very, buyers are in a greater position to negotiate, getting their closing costs paid, doing a 2-1 buy down, just certain things like that. So I really think buyers are in the best position.
No, I agree with you. Seeing homes stay on the market a little bit longer, it gives, buyers a little bit more leverage to negotiate. And I feel that, if you negotiate correctly and you're not afraid to ask for what you feel you deserve, you might not get it 100%, but you're going to get more than if you didn't ask for anything. So I think the market right now is ask for as much as you can. Not guarantee you're going to get it, but you're going to put yourself in a better position to score a
Yeah.
deal than just say, hey, like I just want to go, and hopefully they accept my offer, at a high price, ask for no negotiations.
I agree. The other cool one that came out is the truth about interest rates.
Yeah.
What do you think's
Everybody
gonna
wants to know.
happen there?
So you know what? We're so used to following the data and having our key indicators, say, hey, if the stock market's down, rates are going to be up. If inflation comes down, rates are going to get better. But it's just so flippy floppy that one day things could be up, but they're bad, and vice versa. But I honestly think, I'm positive, and hopefully Andy can give me that positive meter here. I'm positive that as we progress, rates are going to slowly come down. We did take the elevator up.
Yeah.
We took the elevator up, and we're definitely taking the stairs back down. And what I mean by that is that, we saw a rampant rise in rates the last 2 years, and we can't expect for rates to come down as fast as they went up, because that would only cause other problems in the economy that, is going to just cause a can of worms that we don't want to open up. So, it's a very sensitive subject, and I don't think anybody really can pinpoint and say exactly what's going to happen. Like the Fed's been saying, we're just going to have to stay data dependent and continue to see the data.
That's it. And, it's all about the labor market.
It is.
The labor market's just going to really predict where we need to go. And nobody likes unemployment.
Nope.
And so we have most of our nation employed right now. But we'll see. The whole administration right now, people are saying that they're trying to cause a recession. And it's going to purposely be done. And I think it's just a tactic of doing that so that we have a way how we can refinance our current, our current financial debt of $36 trillion. Just imagine if you have a $36 trillion deficit, right? And you just refinance by 0.5%, a quarter percent.
You're saving millions
and millions, right? So it's like it just makes sense, but we'll see, because it also could have a negative effect, right?
Could, yeah.
But it's just like playing a board of chess. It's like how you're going to play that. How are you going to make those certain moves?
No, and you bring up a great point. That play, although it sounds far-fetched, it doesn't seem crazy.
Yeah.
And what I mean by that is that, when they have the opportunity to bring rates down, and then they could say, hey, look at this refinance deal that we could do on all this debt, you don't think that's going to benefit, across. But also, you have to be cautious, because doing that could break other things in
Absolutely. Just like anything, man. It's just like anything. But
so
that's pretty cool.
No, I mean, I think interest rates, I wish we could control them, but there's so much intertwined with interest rates that you can only kind of, predict. Be positive about it, but then the market's going to do what the market's going to do regardless.
Yeah. So there we have it. So housing prediction, I think it's going to be maintain where it's at.
Yeah.
Buyers, for me, have the greatest freaking
and
opportunity right now, right?
And also be cautious that just because the rate is high doesn't mean that there isn't incentives, that there isn't strategies that you can utilize to be able to, bring your payment down or meet your goals financially, whether the monthly payment isn't in your range. There is things like you mentioned, the buy down, seller credits, full buy down of the rate, so there is a lot of options. But what I wanted to touch on is, how do you think that rate hikes affect the buyer's confidence? And looking at it from a psychological point of view, it went up 0.5%, it went up 0.5%, but I feel sometimes they think about it like, oh, that's a lot, but in reality, once you break down the numbers, it's a lot less, in monthly
you may
payments.
Think it can, Brian, but here's the thing: it really depends on what market you're in, and what I mean by that is, what city, what state you're in. San Diego, 0.5% is huge.
Yeah.
It's a huge change. You're talking about a $300, $400, $500 payment, because the medium sales price in San Diego is about $960 right now.
Yeah.
So that 0.5% will make a greater difference, like here, New York. But if you're going to states, I'm going to say just Alabama, very different.
Yeah.
It's going to be very different when your medium sales price of a home there is going to be in $200,000. So, mentally, it could be very distracting. It could be, that just takes away a car payment, right?
Oh, that's a good way to put it. Like, now I can't pay for those extra $200 that could be allocated here. Now, unfortunately, I can't.
Well, here in San Diego, it's going to be more like $400 or $500.
Yeah, I know.
I know. So, but yeah, those are, again, that's what the people are talking in these trends, which is pretty cool. And then the creative financing we talked about, well, that's one of the things people are asking, like, Where's the creative financing?
So
how do I do this?
I actually had a question for you on that one. So a few years back, you actually negotiated a seller financing deal, and you were able to get it under what's called a subject to. I wanted to ask you, share what that was like and, how you were able to negotiate that.
Yeah, just like anything, when it comes to sales, it's just negotiation. You always have to try to identify what that bleeding neck is, right? Like what's causing them or prompting them to want to sell their house. And so you have to identify that, and then you have to just figure out where can we find the common ground so that we can potentially do this. So with the subject to, you're taking possession of a property subject to there being a mortgage there.
Yeah.
So in my case, we purchased a home at market value, right? So it's not like I did a discount or anything like that. No, I'm going to give you full value for your property, but allow me to take your current note, which was a VA loan at a 2.25%. Right. And so what is it that you really need right now? So the person's like, well, I can have X amount of money, which is like, because the house was almost paid off. So they can have 600. But I don't want to pay taxes. So we found a clever way of how to do that. I just gave $100,000 up front, took possession, and told them I'm going to pay off everything in 3 years. And so we did that. We did everything on the residential purchase agreement. And then we did a seller finance addendum. And that really displayed all the terms and conditions upon what we agreed on, as far as how much was going to be given up front, what was, who's going to remain in title, et cetera. In this case, the person was like, well, what if I want to buy another home? The cool thing about that is you actually align yourself with a third-party company that collects the monthly payments from your tenant. So when you get a tenant, they'll pay the payment there. And now the owner, I provide them access. So that way in 6-8 months or a year, they decide that I want to buy a home. I want to become a homeowner, but I have that against my debt to income because I still have a mortgage.
Yeah.
That could show that somebody else is making that payment.
And take that off their...
Correct. Take that off their debt to income ratio because they can show proof that somebody else has been making the monthly payments.
Wow. Okay.
So there's ways how to get clever with that. That was a way of how to purchase a home. Some people actually do it, very common. I got this from Pace Morby. He's in Arizona. Shout out.
Pace. Shout out
Pace. But this guy's just very clever, very creative. Something that most businesses were actually purchased way back when. You're talking about the early 1900s that were purchased through what's called a subject to.
And it just blows my mind that it's something that has been around for so long, yet so little people utilize it. And for those that don't really, just to pull it all full circle, essentially the seller is going to act like the bank. Correct. And you buying the house is going to pay the bank, which is then the seller, but they're just basically the buyer's basically just covering their mortgage payment and gives them the terms that they decided that makes sense for them to be able to release that note and, give you access to the property.
Yeah. And this is very common where like equity is very stagnant. And somebody they need to get rid of it because they got a job offer somewhere, but they can't sell it. And there's a formula to it, essentially.
Nice. Okay.
Cool.